Good afternoon, ladies and gentlemen. My name is Cassandra, and on behalf of Huawei, welcome to our very first Huawei Cloud Day, FinTech Digital Innovation Symposium. First and foremost, I would also like to thank Morpheus Labs for co-organizing this event with us. We appreciate every speaker and guest who is here today with us at our AI Lab, and not forgetting the audience online. Thank you for your time. Please do stay with us till the end to win some lucky draw prizes during our Q&A. First prize, Huawei Watch GT2 Pro. Second prize, Huawei Watch Fit. Third prize, Huawei Band 4. Without further ado, it is with great pleasure that I introduce our speaker for today, who will be delivering his welcome speech. Mr. Rex Lay, Managing Director of Huawei Cloud and AI Singapore. Rex has been in Huawei for over 15 years and has been based in Singapore for the last 8 years. He has extensive experience in the emerging technology and innovation. Mr. Rex, please. Thank you.
Good afternoon. I'm Rex Lay, MD of Singapore Huawei Cloud and AI. It's my great honor to welcome you to Huawei Cloud Day, FinTech Digital Innovation Symposium. According to the recently released Gartner report on global IaaS market share 2019, Huawei Cloud grows at the fastest rate of any provider, with revenue growth of more than 200%. So with our more than 200 available cloud service to choose from, Huawei Cloud is the platform of choice to more than 3 million enterprise users and developers to develop ground-breaking innovation and solutions. In the international market, Huawei Cloud has launched cloud data center in Singapore, Malaysia, Hong Kong, Thailand, Russia, South Africa, and many countries. With 47 available zones across 24 regions, our cloud provides consistent performance and experience for multi-nation companies, helping Chinese-funded enterprise go global and foreign-funded enterprise to go China. Looking forward, we have already started the cloud-first strategy in global market, which means that Huawei will provide the cloud service firstly to customers based on 30 years ICT experience. Huawei Cloud will continue to leverage its full-stack capability in cloud and AI to offer reliable, secure, and sustainable public cloud service and hybrid cloud solution to our customers and partners. Together with our partners, Huawei Cloud is committed to build a robust ecosystem for startup success. Over 10,000 consulting partners and 2,000 technology partners to have signed up with us globally, bringing with them a wealth experience, client as well as onboarding over 3,500 SaaS product service in our ever-growing cloud marketplace. The AI Lab is home to many joint innovations that we had with our partners. And we are proud to showcase these success stories to guests who visit our AI Lab. In 2021, we will continue to support and enable our partners through ecosystem support, go-to-market activities, and enablement programs. The partner ecosystem is especially important in the fintech and business FSI sector. Traditional players require cloud-native applications to be deployed to scale to complete their legacy core system. These business risks can be addressed by fintech companies who typically offer cutting-edge regulation complement technology that have lower cost and enhance their experience. Likewise, fintech need to be coexist with traditional business FSI players. You need the partner to demonstrate their value and market relevance. So cloud service will complete this ecosystem as the fundamental platform on which the solution and applications. For today's event, we are deeply honored to have invited the FinTech first thought leaders who will impart valuable expert opinion on what's in store for Singapore business FSI sector in 2021, and how companies can embrace innovation to ride on the technology wave of success. Finally, I would like to thank you again for this time. I hope you will find the rest of the session interesting and useful. Thank you, everyone, and have a good day.
Thank you, Mr. Rex. Next up, we are very honored to have invited industry thought leader, Mr. Greg Unsworth from PwC Singapore to share with us insight for FinTech 2021 and beyond, industry trends and strategies. Greg has been with PwC for over 25 years and has been based in Singapore for the last 14 years. He has significant overseas and regional experience, having previously been based in London, Sydney, and Tokyo office. He also has extensive experience providing advice to companies globally on corporate governance, risk, and business performance. He is heavily involved in the development of key PwC thought leadership around digital disruption, emerging technology, and innovation. Mr. Greg, please.
Well, first of all, thank you very much for that warm welcome. And it's very exciting to be with everyone here today. I think these topics are ones that are really important to us, really important to the financial services sector. We're seeing such an increase in adoption of digital technologies, new consumer behaviors, and even different business models evolving. That this era of tremendous change we see. In fact, I believe going forward, we're only going to see that accelerate. And this provides a lot of opportunities, both for existing financial services organizations, as well as new fintech startups coming in and getting involved in these areas, creating unique solutions, as well as obviously the technology sectors playing a very big role as we go forward as well. So, thinking of this change that we've got, and here we see a quote from none other than Bill Gates. And the quote being, we need banking services. We don't need banks anymore. Obviously, this isn't an anti-bank statement. This is talking about banks in a more traditional sense, particularly a physical sense, as being less and less relevant as we go forward. If we look at banking as a concept of a range of services that are going to be important for consumers, for businesses, for society, if anything, the importance of banking and financial services will only increase. But however, the needs that are going to need to be addressed through the financial services sector and through fintech players will get more sophisticated, more developed, and there will be lots more opportunity as well to create value and impact going forward. So to illustrate this degree of change that we see, I've just got some data points here which I thought might be relevant and just get a sense of some of the impact we see. A number of sources for that. Some of this is based on our own research at PwC, where we look at global trends that are developing. We also are looking at some of the information that we get from other leading industry players as well. CNB Insights, we're also looking at the joint development, looking at the fintech collaboration, for example, with Amazon and Google that was produced. So just to quote a few things that we're seeing here. So first of all, that headline number there, 46% of consumers are using only digital channels for banking. And this obviously illustrates the point, that journey we're seeing, the banking sector already going on of I suppose the less significance and importance of bank branches. Obviously, we'll see that continue to evolve in its own way. If we look also at the impact then of new technologies, for example, blockchain, we see blockchain I would say, has not widely been adopted in a wholesome, wide scale, at scale model just yet in many industry sectors, including financial services. But the potential there is significant. We see more and more applications for blockchain technology being developed. And if you look at just a couple of the examples quoted here, when you think of the potential, by moving securities onto blockchain, talking about saving anywhere between $17 billion to $24 billion in global trade processing costs, trade processing is quite remarkable. And then even if you drill down in a specific area, obviously all banks incur significant cost on their compliance agenda and staying on the right side of regulations. If you look at the potential impact of blockchain on KYC requirements, saving up to $160 million annually, as quoted some of the examples of that. If we flip to the right-hand side here and talking a little bit more about industry transformation and particularly digital transformation of the financial services sector, once again, it's a journey that many organizations are already on. 66% of financial services respondents, based on our studies, have indicated that they are making substantial investments in AI over the next 3 years. And a lot of this obviously is driven by the importance of data, the data insights that they can get, the ability to provide enhanced services through that data. So the quality of the data, the ability to share that in a trusted way will also become more and more important going forward as well. And I want to, in talking about some of those insights, the other one here, which is a little bit less quantitative in nature, is this last point about purpose. And coming back to the future of financial services, we're going to see a greater increase in the focus on purpose of the organization, in addressing societal impact. We obviously see the increased focus on ESG, sustainability, but the comment around purpose goes beyond that. And I think with all the change we're seeing, that's a really important thing to keep sights on as well. So with all this change going on, I've really captured this in what I see as the 4 C's shaping financial services of the future. First of all, customers. And we see customers, consumers enabled like never before. So much more choice in terms of the different services and products that they're tapping into from a financial perspective. And a lot of this is driven by the second point, the increased competition we see. The need for, first of all, traditional banks to continue to evolve their services, offer a more digital-friendly and consumer-friendly service offering is increasingly important. But also, as we describe here, the fintech revolution, and we'll be talking a lot about this today during the discussions that we have. And that is actually creating a lot more competition, a lot of pressure on both the traditional banks to continue to evolve their services, their business models. And then also we're seeing a lot of new entrants coming in, whether the large technology companies, platform companies playing their role, as well as obviously a very vibrant startup ecosystem. It'll be an interesting dynamic as we look to the future, how these various players will interact, to what extent will there be competition, collaboration, or co-opetition, as we would often say. The second one, the next point there I'd say is around the compliance agenda. So obviously we see a lot of complexity around the need to, in the past, to adhere to existing compliance requirements for financial services industry. This is going to get more complex. We're seeing the regulators step in, address new and evolving risks, especially digital-related risks. We're also seeing an evolution of regulators where they're also trying to play a role to help make sure that they're encouraging innovation in the right way as well. So getting that balance between trusted ecosystems and also being able to protect consumers in the right way is going to be quite key. But also just seeing that keeping pace with that change as new models come on will be very interesting. Particularly when we look at the fintech organizations that haven't traditionally been regulated, we're almost being forced into a quasi-regulated environment, because as they work with the financial services sector, as they serve consumers and organizations there, they'll either get directly or regulated, or increasingly the financial services companies, some of which they're serving, will insist on some of those changes. And the final point there I'd say is a community. and can banks be a force for good? Back to that point on purpose. And that will be really important, earning the trust of consumers and also all of the stakeholders as well going forward that will be interested in how what part banks and other financial services institutions are playing. And actually, increasingly, consumers will vote on that, not just the services that they're getting as well. It will be an important part of their buying, their transaction related mindset of who they use for their various products and services. So looking at that change that's going on and the shaping of those 4 C's, I suppose, reshaping the financial services. As I look at the financial services industry itself, whether traditional banks, whether fintech companies, whether new entrants, I really see 5 new world imperatives. First of all, this concept of do digital, be digital, which are 2 very different things, although can be quite aligned when done properly. Do digital is about providing the right technology-enabled services for clients and consumers. Being digital is much more comprehensive. It's about culture, it's about leadership, it's about building in a digital and agile mindset into every part of the organization, enabling it with the right technology, and also having the willingness to take risks, to be entrepreneurial, and to reward some of that entrepreneurship that comes through the organization. So a much more comprehensive program will need to be facilitated by organizations going forward to achieve that vision. Secondly, and very importantly, building what I describe as real world trust. So one part of trust is what I spoke about a moment ago on purpose and a societal impact. There's also that very pragmatic aspect of trust of, do consumers trust my transactions, my assets to be protected? Do I trust my data to be protected and secure? All of these things will get increasingly more challenging in many ways. And once again, it'll be important that consumers are confident to be able to use those services going forward, particularly as we start embracing technology, newer technologies in a much more broader way, such as blockchain, such as artificial intelligence. Particularly things such as ethical AI will be incredibly important. Proactively defining and managing risks for financial services organizations will be incredibly important too. And this isn't about one static set of risks that any organization needs to understand and manage. It's about a very fluid situation where there are new risks evolving all of the time, and having a basis of being able to manage those, anticipate them, and respond in a very effective way will be extremely important. The next point there is all around people. Increasingly, we're hearing a lot of coverage and a lot of attention on the need to upskill society and different sectors of the economy for the future, upskilling, particularly around digital skills. But I actually think this isn't the most important thing. I actually think the really important part is beyond digital skills that are going to be required for all employees and the workforce more broadly. I think it's about the human-centered elements that need to be reinforced as well. Upskilling for agility, for leadership, the things that technology can't provide or manage well. And that's really where the strength comes of using technology, is where humans can capture the best of their qualities together with the technology enablement to provide really great outcomes, and impact will be so important. And the final point I'd say there around imperatives is building partnerships. I think any organization that thinks in this new world that's becoming much more complicated, more sophisticated, with higher consumer expectations, if any organization feels that they are able to address all needs of their consumers or all needs of their business partners, I think they're certainly at risk in terms of ensuring that they're fully relevant for the future. The key here is understanding the strength, the core values of an organization, play to those strengths, but very much work with others. And this could include organizations that are in adjacent sectors. It can be working with, if you're a traditional bank, working with technology providers in new and different ways, working with startup fintechs as well. And I would say that for the startups to look out for the right partnerships that can strengthen the position, the value proposition, also provide a better outcome, very importantly, for consumers as well. So I would just finish this part with going back to a question here. And the question really is about reimagining the future. It's about reimagining the future world of financial services and what will this look like. I think some of the areas that I think are really interesting to explore is to what extent will the consumer, new technologies completely transform and disrupt our existing service offerings? To what extent and how quickly will blockchain services really be adopted and embraced on a large scale basis? How will truly AI-enabled business change the way the banking sector works and financial services are provided is going to be really important. I think when we look at the ecosystem, it's interesting to look at the future for traditional banks and how they continue to evolve and move up the curve. I do think there's some natural strengths they can play to, given their existing relationships they've got, the trusted environment, the fact that they're established and operating in a regulated environment, I think does provide some help. But obviously, new innovative fintech companies, technology providers will provide new competition and new challenges. And then finally, I'd say there's a challenge in reimagining the future for the role of regulators as well. How do they promote that right level of innovation while protecting consumers? And there's going to be a lot more pressure coming on regulators to ensure what's often described as a level playing field for all as well. So I think with that sharing, I hope I provided some good context for the rest of the discussion. I hope certainly I've stimulated some thinking about what the future could look like for financial services and just how quickly we're going to get there. And so I would invite you once again to reimagine that future and make the most out of the rest of the sessions today. And I look forward to engaging all of you later. So thank you very much.
Thank you, Mr. Grant. That certainly was an insight to the future of fintech. Next, we have with us Mr. Anson Shen, Chief Strategy Officer from Huawei Cloud and AI APAC, to give his keynote speech on Huawei Cloud, powering financial services in the new normal. Anson is a cloud expert and trusted advisor. Prior to Huawei, Anson was one of the founding members of AWS professional service team for global financial services customers in Asia. He has extensive experience working with financial service providers across Australia, Hong Kong, and Singapore. Mr. Anson, please.
Thank you, Cassandra. So good afternoon, everyone. For the people who are in the studio, as well as the people who's watching this live feed, good afternoon. Welcome to Huawei Cloud Day. So it's my pleasure to talk to you today about how Huawei Cloud can power financial services in the new normal. Now, the pandemic strikes us very hard, and I think everyone recognizes how the pandemic has accelerated the digital transformation, especially in the financial industry. Now, Huawei is ready to team up with the leading financial service providers, as well as the fintech companies, to help the industry go digital. So there are three topics I'm going to cover today. First, we will look at the Huawei Cloud business updates. We will then share a little bit about our observation in terms of how the innovation has been happening in the industry. And lastly, we will talk a little bit about the Huawei Cloud's capability. So as per Gartner report, and also our managing director, Rex, has mentioned, right, in terms of the cloud infrastructure as a service, Huawei Cloud is actually the fastest growing cloud provider amongst the major vendors like Amazon, Microsoft, Alibaba, Google, and Tencent. We have overtaken IBM and has become the #6 globally in 2019. Now, this is the outstanding result, considering Huawei Cloud Business Unit was only officially launched 2 years before then, in 2017. Along with our partners, Huawei Cloud currently have 24 regions and 47 availability zones across China, Asia Pacific, Europe, Africa, and South America. We have a global footprint and over 200 cloud services running on top of it. Our global success is built upon our leading position in China. As you can see on the slide, the Huawei Cloud is ranked as #1 in terms of DevOps and financial service cloud capability in China. This shows that we are the most loved public cloud vendor for financial institutions in China. We also have a leading cloud management service to help our customers to manage multiple cloud environments. So while the Huawei Cloud can be still a young brand, a young player in the FSI industry, Huawei do more than just cloud. And we as a whole has been a trusted technology partner and long-time vendor for the global financial service industry. You can see on the slide that we have globally over 1,600 FSI customers, and 45 out of top 100 financial institutions use our product and services. And I'm sure you can recognize some familiar logos there. Now, as one of the most important customers, DBS has awarded Huawei the most valued technology partner last year. During the pandemic and during the Huawei's Global FSI Summit last year, the CIO and head of Group Technology and Operations of DBS Bank, Jimmy Ng, also has openly talked about how Huawei was able to fulfill DBS's capacity requirement during the period of pandemic. Right? So for the DBS colleagues who are watching this live feed, we thank you for your recognition. Now let's move to part 2, where I'll share a little bit of our observation in terms of how FSI market has been transforming itself in this evolution. So what we see universally is actually an emerging trend for financial service provider to build a platform, and which is really to provide a universal financial service instead of the traditional financial service that you see on the left-hand side, right? So in the traditional world, the bank focuses on the transactions, the deposit, the loans, but then moving towards what you experienced in the last couple of years, people start to access banking services on their mobile device, right? So you can see most of the young generations, they hardly do online banking on devices that's not mobile. So what we see towards the future is that this mobile app of the financial service provider is evolving to become what we call a super app. Instead of the basic financial functions, it starts to take part in more of the financial life of the customers. So activities such as ordering food, ordering a taxi, things like that, ordering a movie ticket, can be all functions you may find are relevant in that super app, right? So on the right-hand side, you can see a couple examples. On the top, that's the China Merchant Bank. On the bottom, that's the DBS. So China Merchant Bank has launched this super app, and they've changed the way they measure their business to what they call the MAU, monthly active users. That's the same metric that Google and Facebook measures on their app. So they have got great success in China and got up to 170 million monthly active users on their super app. And you can see 72% of those activities is actually not financial related, right? So this shows how powerful it is if you take that step to engage with your consumer. Now, in the similar events, DBS's super app has got more than 650 APIs, and they've signed up more than 400 partners with their app. So to be able to do that transformation, what the financial service institution, they really need to take is a digital transformation, right? They need to shift the focus from traditional user-based, traditional bank card driven, the transaction driven, towards the future where it's more user-driven, and they need to pay more attention to the digital journey of their customer in the digital space. Right. Now, on the right-hand side, you can see some of the areas that we recommend the FSI institutions to pay attention to. The first is about digital customer acquisition. So we've seen leading financial service providers offer their app to not just their customer, but also people who don't use their services. For example, I can get Starbucks discount if I download a particular bank app. And then although I'm not the bank's customer, then over time, if the bank understands the user more, they can engage them at the right time to convert them to be the bank customer. Right? The second thing is about really launching more digital services, more than just the traditional banking services. And the third pillar is the digital operation. This is where people integrate with the ecosystems. And also, you need to change the measurement from AUM to MAU, from assets under management to monthly active users. So to be able to do that transformation, digital transformation, the bank needs a digital foundation to start with. Now, you can see the new technologies such as cloud, AI, big data, and blockchain really allows the bank to upgrade themselves to a digital bank, an intelligent bank, right? Now, fortunately, the good news is that on Huawei Cloud, you can find all that technologies. This leads me to talk about the last part, which is our Huawei Cloud's capabilities. So the job zero for any cloud platform to serve financial institution is actually to meet the compliance requirement. Okay, and Huawei Cloud is no different. It has been audited by accredited third parties and hold more than 50 compliance certificates. You can see on the screen. Internationally, we have met the ISO, the SOC, the CSA standards, etc. And regionally, we have the Singapore MTCS Level 3 certification. This means that Huawei Cloud is certified to host and process highly confidential data in Singapore. That's not easy, right? We can all recognize that. From industry perspective, you can see that we have got the PCI DSS certificate, and this certified us to process financial and payment data as well. Now, Singapore is a very important place for Huawei Cloud, and we pay particularly more attention to Singapore's local FSI regulation. To help our customer address this regulation requirement from MAS and ABS, we have published a white paper which contains the detailed information in terms of how Huawei meets the specific requirement and how, as a customer, you can inherit our compliance posture to help you meet your compliance requirement. Now, requirements such as OSPA, such as TRM, is all listed in this white paper. So feel free to Google it out, and you will find lots of information in it. In addition to MAS and ABS, there are also regulations from Personal Data Protection Commission, PC, as well as the Infocom Media Development Authority, right? So for this, we have another white paper focusing on specifically how Huawei Cloud protects the privacy and sensitive and confidential data. So now, after showing you the compliance certificates, which is really the security of the cloud, I'd like to talk a little bit about security in the cloud, right? So on the Huawei Cloud, there are a number of security features and tool sets our customer can leverage to help them secure their workload on Huawei Cloud. What you see on the screen is actually a baseline architecture. It shows a simple internet-facing workload with a simple three-tier architecture. Right. On the top of it, you'll see the internet users, they will access the workload via the CDN or load balancer. And behind the load balancer is the server tier and the data store tier, respectively. It's a very simple architecture. On the left-hand side, there's the operation personnel access the resources via the VPN connections. So for such a workload, we actually have a number of security services at every tier, you can see, to protect your workload. So this is what we call the defense in depth, right? So instead of just protecting your perimeter, now we actually have a lot more service to protect you at every layer. So on the screen, you can see there are quite a number of orange icons. This represents the security service. At the web front, you have the WAF and anti-DDoS service to protect your the web front interface. And we also have a vulnerability scanning service to continuously scan your workload from outside to detect your vulnerability before you're getting damaged. We also have a 24/7 security expert service, which can support you with any security incidents at your fingertip. Now, behind the load balancer, you will see the host security service and the container guard service. Those services help detect vulnerabilities on your servers and also help you to mitigate those by automatic patching capability. And lastly, on the data layer, right, you'll see there's the DEW service, which is a KMS service to help you encrypt your workload. And there's a database security service to help protect your database and also provide you audit capability so that you know exactly what's going on with your database. Now, on the left-hand side, with the operation personnel, we also provide a managed bastion host so that every administrative activities can be audited on this robust platform. So that's really a comprehensive set of security service. So now I want to switch gear a little bit to bring up the topic of hybrid cloud capability. So the reason I wanted to talk about it is because that's one of the distinctive advantages that Huawei Cloud brings to the table. Our hybrid cloud essentially brings the service that you can find on the public cloud to a private cloud environment. Because of the fact that we use a universal architecture on the public cloud as well as the private cloud stack. So on the Huawei Cloud Stack, you will find more than 80 services. This includes the basic service as well as the high-end services such as machine learning and the big data analytics service. It comes with a universal operation and management panel, right? So we can manage it from our managed service, and you have a administrative access to the stack as well, locally. The stack also comes with the tool sets that allow you to manage other cloud environments, such as vSphere, so that you can have a universal operation panel in front of you. And lastly, the stack inherits all the security and compliance features that I just talked about. So after talking about the security and hybrid cloud, now I want to briefly touch on the AI and the big data capability. I think previously people already touched on this topic about how important data is in the new world, right? Data is the new oil, as people say. So on Huawei Cloud, you will find big data analytics service, whether it's a Hadoop, Spark, or managed data warehouse, all the way to the ETL automation, data catalog. We have the relevant services for you as a platform, as a service. We also have a machine learning platform, which is called the Model Arts. On that platform, you can automate the entire machine learning workflow. So with the big data AI capability, we can really help our FSI provider to turn data to insight and to create value in their business application. So lastly, I'd like to share with you some of our partners in the FSI ecosystem. Partners are very important to Huawei Cloud. And it's our principle that to build a foundation where our partners can be successful on it, can grow on it. So we do a lot of joint go-to-market and partnership with our partners in various kind of projects. You can see through the different area, from architecture to branch to core banking, insurance, and big data and mobile innovation, we all have various partners, and that's not the full list, right? Just to give you some example for the partner called the Form Syntrum, we have a joint project to serve one of the top banks in Thailand. For Sunline, which provide core banking services, we have a joint project to serve a bank in Indonesia, right? And Terminals, I think one of the well-known fintech company has worked also with us to serve a fintech holding company in Asia Pacific as well. So So it is, as mentioned, on Huawei Cloud, we like to see the success of our partners. And for all these financial institutions, we cannot, for all this digital transformation in FSI industry, we cannot do it alone. So we do it together with our partners. So with that note, I'd like to close my keynote, and I wish you all good health, and please enjoy the rest of the Cloud Day. Thank you.
Thank you, Mr. Anson. That was an amazing speech. Moving forward, let's welcome Mr. Chuang Pei Han, CEO, founder for Morpheus Labs. He will give his keynote speech on blockchain on Huawei Cloud, technology for next generation. Pei Han, a serial entrepreneur with more than 10 years of experience in business development and fundraising. Being a business veteran, he expanded his previous company with conglomerates in the emerging market. 5 years ago, he founded Morpheus Labs with Dorel and Bruce, which is one of the fastest growing low-code, one-stop blockchain application development platform in the market today. Mr. Chuang, please.
Thank you very much, Cassandra, for the warm introduction. And I appreciate the Huawei and Morpheus team for making this Huawei and Morpheus first symposium happen. Very happy to see industrial key leaders and familiar faces getting together here in this event. My two co-mates, Hotline, President of Singapore FinTech Association, Kevin, Chairman of SG Tech Blockchain Community, and many who I have been speaking to for some time, Mr. Kevin from Temasek, Mr. PC from Essential and R3 team. Definitely looking forward for our potential collaboration in future. I'm honored to be here today to share my personal experience and thought on blockchain adoption and innovation. Okay, so before that, please allow me to quickly share my recent family trip during Chinese New Year. So on the holiday, more than a week ago, I brought my children to the zoo. In this penguin area, you could see a large army of penguins standing right there. Despite how frantic the children were trying to get penguins' attention, they just stood there and didn't move. For the time that we entered the zoo to the hours later when we left, each of them stood at the same spot and exact same position. None actually moved an inch. The reason why I'm sharing this is because it closely resembles how most of business respond to innovation. We talk about Kodak, Nokia, Ericsson, BlackBerry, and more. But what is consistent seems to be the fast changing of consumer behavior versus business reluctance to adapt to new innovation. Recently, we witnessed e-commerce wipe off all the retailer, and also how pandemic drove restaurants and many out of business as they were not able to pivot their business model. No doubt, pandemic accelerated consumer behavior changes and social interaction. Example, surge in mobile payment, dining and shopping pattern. What seems obvious is speeding up of digitalization in financial services sector. And technology such as blockchain would definitely play a big part in this digitalization push. Okay, so this brings me to the topic proper. Let's zoom in digital banking or digital financial services, which would be the key area for blockchain to prosper in at this moment. Can you imagine the banking processes that are actually older than my parents or our parents or even maybe our grandparents? And they are actually already irrelevant to current demand as consumer behavior keeps changing. Blockchain is actually a new ledger system, a more secure and transparent way to transact data and value. This greatly reduces time, cost required, and removes the middleman, which then opens up a new horizon of opportunity and business models. Example, microtransactions such as investment, payment, loan, and previously Mr. Greg mentioned KYC, automatic KYC, and RegTech. This could actually save a lot of the documentation and works. And these are actually all the good use case for blockchain. However, things are actually not that easy. There are barriers to adoption. Example, entrepreneurs who are actually driving innovation within enterprise are facing more difficulty than entrepreneurs. Other entrepreneurs usually focus on attack and disruption. Entrepreneur, on the other hand, has to take care of current structure of the company and optimize it, while on the other hand, they have to make sense out of disruption. And this becoming very time consuming and resource draining when they move from POC to implementation. As they are all new technology, in this case, blockchain, there's inherent risk failure during the implementation stages. And solving these pain points is the exact mission for Morpheus Lab. For Morpheus Lab, our mission is to empower people to rapidly solve complexities and unknown in building DX and IT solutions. Our vision: realize mass adoption of blockchain through our end-to-end platform that simplifies blockchain application development. In short, we simplify blockchain application development and deployment. So just allow me to briefly share with you some of our core features. We have a collaborative development environment which allows team members in different countries to co-work on projects together remotely, work from home. Yeah, blockchain. We are also blockchain agnostic. We have a blockchain agnostic dashboard for you to switch around different blockchain in just a few seconds. Application library is what we currently is pushing, where you can actually browse, download, and customize any simple solution that you want in simple steps. And we also have a mission critical development tools for you to use to fast track all your development processes. So in overall, 99% of enterprise blockchain use cases involving multiple parties. Hence, Morpheus Lab Platform SIG runs on a cloud platform. It provides an easy way to govern business network and solutions, as this is a very critical component. Therefore, working with a strong cloud provider is very important. We are fortunate to partner closely with Huawei Cloud, as it provides end-to-end chip-to-cloud optimization and full cloud stack built by Huawei. So over here, we actually here end-to-end, and we also, for us, Morpheus Lab, we also offer end-to-end, but it's actually front-end, and that's the reason why we could actually work closely with Huawei and with a tight synergy. This tight integration between Huawei Cloud and Morpheus SIG platform helps customers to free up significant amount of resources and time to develop, test, and deploy solution, which ensure faster time to market solution to customers. So in closing, blockchain is the key to unlock fullest potential for many businesses in this digital era. If implemented optimally, I'm thankful for the ecosystem that Morpheus is building. Is helping each other through collaboration, tie-ups, joint promotion of blockchain solution, and business development. We, Morpheus are thankful to close collaborate with and support from our partners like Huawei, R3, Proximex, and many others. Not to forget, this wonderful symposium was made possible by Huawei. Huawei has a wonderful platform that supports blockchain integration and adoption globally. Their focus on blockchain ecosystem will greatly benefit companies that want to transit blockchain technology. And Morpheus is proud to be the first partner working together on this area. This symposium is just the beginning. Morpheus will continue bringing value-added partnership that will benefit the ecosystem in the upcoming future. Thank you for existing partners and potential partners or partners to be for attending this symbolic symposium. I would like to thank each one of you personally for taking time off to attend Huawei and Morpheus event. Lastly, for me, if you see an opportunity and you have already careful thought to capture it, then do it. Do not be like penguins. I mean, that's what usually I tell my children. Nothing worse than not moving because others will capture it, and be brave and dive into opportunity. So now, thank you so much, and hopefully everybody will enjoy the rest of the symposium. Thank you.
Thank you, Mr. Chuang, for such a wonderful speech. Now, let's take a 5-minute break and we will see you shortly.
body and soul. I'm yours and you are mine. Love ties the hands of time. So clear, so verified. Won't you read my mind? Read my mind.
Welcome back to Huawei Cloud Day, FinTech Digital Innovation Symposium. Now, let's welcome Mr. Victor Bodman, Head of Insurance from R3, to share about solving inefficiencies in insurance on blockchain distributed ledger. Victor has more than 15 years of insurance and reinsurance experience leading digital transformation initiatives at companies including Swiss Re, Zurich, QBE, experience in strategy, product development, and digital transformation across underwriting, claims, risk engineering, and accounting. With a passion for driving business value and delivering exceptional customer experiences. Mr. Victor, please.
Thank you, Cassandra, and good morning, good afternoon, and good evening, wherever you may be from London, and thank you for having me here. The technology around blockchain and DLT has come a long way, and I'm going to take you through a few of the use cases that we are seeing in insurance. But just before we get into that, it's worth recapping just how far the technology has come. So Corda DLT is designed from the ground up for the enterprise across any industries, and we've got well over 350 different initiatives, either live in production, in development, or even in deployment at the moment. And the four pillars of the technology evolve around what we call the on-ramp, the identity piece. So knowing who you are doing business with. That starts with things like person identity, corporate identity, but then evolves into the counterparty due diligence, the anti-money laundering type checks, all these sorts of things that can then be immutably attached to the business transaction and flow through to all the business parties involved in those transactions. Another aspect there is verifiable credentials as well. So validating that doctor providing the treatment in that healthcare insurance scenario does have a qualification, is not struck off the list. The person applying for that job does have that university degree, and it's not a fraudulent application, for example. Building on the trust of knowing who you are doing business with, we then have the data exchange aspect. So the single source of truth, the information being shared across the multiple business parties, the stakeholders in that business transaction, and only the ones that need to know that information. So the single source of truth built on shared business logic, across the shared network, then builds more trust into the system and enables things like automation to happen. So we move on then to the smart contracts, the executable code that can then transact business automatically, execute policy instructions. Perhaps it might be a parametric insurance cover, receiving information from a flood sensor to then execute perhaps a payment, a claims payment on the back of that automatically without anybody touching that. And this gives rise to things like usage-based insurance, micro-insurance, and other such things as well, because of the automation that can be built into it and the trust around that as well. And then finally, we have what we call the off-ramp. It's then the value transfer, the payments aspect. So building on the trust of who you know who you're doing the business with, the business transactions trusted and immutable, or everybody looking at the same information. Everybody knows how that contract is being processed, and then executing the payments on the back of that. And all of this built on a trust layer and immutably connected. So payments on traditional banking rails, dollars, yen, euros being moved from one account to another, and certainty that it's received in the receiving bank, then feeding back to the counterparties in the business transaction. On ledger payments, so digital currencies, tokenization, CBDC, central bank digital currencies, all these sorts of things are being delivered on Corda as we speak. All this packaged with an intercompany workflow aspect. with strict privacy, information only being shared between the 2 or more counterparties involved in that transaction, so it's not broadcast across the entire network. It's efficient, it's immutable, connecting all the parties, and it's scalable with tens of thousands of transactions being able to be processed a second. So what sorts of problems is this technology solving in the insurance space? Well, what are those problems? The friction points in insurance currently are first and foremost around the customer interaction. So how better to serve the customer, get information from those customers, be it a retail, private individual or corporate. Typically, there are many data points that need to be transferred to a broker or an insurance company and further up the line. So how we can make those efficient, how we can make that processing easy. Well, Core to DLT can connect things like a corporate's ERP tool to the insurer's information systems, and therefore share information much more efficiently and seamlessly. So gone are the days of passing emails around, or in the past paper documents around the risk and the assets and the data points, but seamlessly connecting on a DLT is what's happening in the future. The next friction point is around the intercompany one. So this is really information sharing between brokers and insurance companies, reinsurance companies, third-party claims service providers, loss adjusters, lawyers, the insurance ecosystem. So how they can more efficiently share information amongst themselves. The intra-company one is the third friction point. And this is really around large organizations that have multiple business units, multiple subsidiaries that conduct business transactions between themselves, between a group entity. Risk might be pooled, premium might be ceded by a group or to a group entity, for example. And these processes typically require a quarter-end closing process where they go through a 3-week process and do multiple reconciliations. Well, Core to DLT can provide efficiency there, but not only that, and speed up the closing process, it can provide transparency onto exactly what's being written in those subsidiaries at any point in time. So the group entity has a lot more visibility as to managing that business. And then finally, the final friction point here is the inter-industry friction point. This is really around connecting other ecosystems like the healthcare industry to insurance and making those interactions much more efficient. Supply chain and business interruption insurance, making the information flow there much more efficient. And we've got numerous use cases and solutions across the insurance value chain here: distribution, underwriting, policy administration, management, endorsements, claims, and fraud is a big one there as well. We'll touch on that in a moment. And then finally to the value transfer, the treasury, the payments aspect as well. So what are we seeing in insurance? Well, of course, R3 Corda is deployed across multiple industries, but in insurance, we're approximately 80% of the world's largest insurers and reinsurers are already using Corda DLT to solve various problems, from the big consortiums like B3I, the Riskstream Collaborative, but also many startups, including TrustLayer, ChainNat, Blocksure, RetaBlocks, and also LedgerTech. And the important aspect here is they're all on the same platform. They're all interoperable, not just between the insurance systems and ecosystems and consortiums, but also between the other industries as well. Of course, I've mentioned healthcare and supply chain already. So specifically, what are the use cases deployment? So we've got many out there, and I've picked just a small number here, and I'll quickly step through these. But this first one here is with LedgerTech and AXA, Bharti AXA in India, part of the big global insurer AXA. And this is really solving problems around motor insurance claims, which is traditionally a very manual, paper-driven, phone calls, emails process, ultimately leading to a very poor customer experience, slow turnaround of claims, and also a huge challenge around fraud there as well. So the solution they've deployed is gathering that information and sharing it amongst the insurers as necessary in a much more efficient and cost-effective way, ultimately delivering benefit to the customer because they can pay out the claim more quickly. The insurance companies go through the process of subrogation, so collecting funds between the insurance companies, depending on who is liable, and settling those financial money flows as well. And this is leading to processes being reduced to minutes rather than days, and double-digit percentage reduction in operating costs for the insurers as well. Moving on to the next one here, we have healthcare insurance, and this is really around how we connect the clinics, verify that a policyholder going into that clinic does actually have insurance coverage at that point in time, and it covers them for the treatment that they are looking for. That allows the clinic to then go ahead and deliver that treatment, knowing that they can collect that the premium or the money for that, the cost of that from the insurance company, and that can happen in a very efficient way as well. And then finally, they're also connecting to the supply of the drugs to that patient as well. So customized drugs that might be provided to that patient, following that through the supply chain and delivered to the end policyholder, with the clinic, with the policyholder having full transparency on where that is in the process. And of course, the insurer can pay out accordingly. And that's leading to tremendous efficiencies and also customer experience improvements as well. Next, we have an example of a insurer in North America delivering a much more efficient commercial insurance offering to their customers' captive, where they traditionally would share lots of information, thousands of data points information between the insurance captive or the client's captive insurance company and the large insurance company over there. And this is just all around improving information flow and also improving the money flow. So if they can resolve the reconciliation work and reduce that down to a matter of minutes rather than days or weeks, then they can also move the money much more quickly, which allows the customer to receive their money in their captive and get the investment returns on the back of that much more efficiently as well. So one example there is that they've reduced the turnaround time from an average of 45 days down to an average of 4 days, including the money movement on traditional banking rails as well. Finally, we have that intercompany reconciliation one, where we have, in example here, a large EMEA European insurer that has well over 140 business units, all of which can conduct business transactions amongst themselves up to the group entity, and it takes many weeks to reconcile those through their quarter-end closing process, for example, and they're reducing that down to a matter of days and hopefully minutes in the future as well, and providing transparency from the group level, the top level down to their business units, as what risks are being written on the books, have the right governance, is the right governance in place around those, or the right anti-money laundering checks being done, etc., etc., providing efficiencies and transparency. So just an example here on the payment side, we're leading one of the largest banking consortiums called the Spunta Bank Consortium in Italy, nearly 100 Italian banks there, and they've reduced the interbank reconciliation down from 30 to 50 days to less than a day. As you can imagine, that creates a tremendous amount of benefit and value to those banks. Both cost reduction, but also a reduction in capital requirements, because the money's moved and in their account sooner than it would be otherwise, etc. So they have to hold less reserves, and provides a lot more certainty around the process as well. So the technology's come an awful long way in the last few years. It's now very much embedded in enterprises. It's moved out of the innovation lab. It's moved away from proof of concepts. It's moved to actual live deployments. There are well over 350 Corda-based projects out there that are either in full production, deployment, or build across many industries as well. So we serve the banking, capital markets, public sector, things like central bank digital currency is a huge topic at the moment, and we're involved in a lot of work there. Insurance is our fastest growing vertical because of the amount of information and data that needs to be shared across all of the parties in there. I've touched on a few of those use cases already. Healthcare, trade and supply, energy, media and telecoms, and many others as well. And there are many of the Fortune the top 200, 500, 5,000 companies using our technology in various ways as well. I'd like to thank you very much for having me on this presentation, and available for the contact for comments, suggestions, ideas, etc. afterwards as well. Thank you very much.
Thank you, Mr. Victor. That was an amazing presentation. Up next, let's welcome Mr. Nicholas Watson, Director of FinTech Solutions from Proxima X, to share about blockchain-powered mobile wallet for payments. Nicholas has over a decade of compliance experience from London and Singapore, which includes 3 years at international law firm Siemens & Siemens, 6 years at JP Morgan Private Bank, and the remaining at Anglo American's Commodity Trading Unit. Mr. Nicholas, please.
Hi everyone. I'll be introducing you to one of our white label fintech products, a blockchain-powered wallet for payments. Before I get started, we can address the question, why blockchain? What is the value proposition? How can blockchain benefit the payments industry? The design architecture of a traditional non-blockchain payment system can be complex and expensive. It can be made up of multiple proprietary systems that each require a license to operate. It can consist of many databases that require reconciliation. And with a complex design, usually comes expensive security costs. On the other hand, a blockchain-powered payment system is more simple and cheaper. The blockchain acts as a shared database that is central to all payments. It consists of a highly scalable peer-to-peer network that users and systems can query in real time. And security requires less consideration, as it is already inbuilt into the blockchain. Therefore, with a more simple design, operators can expect a shorter out-to-market time. And with that, we may start seeing more operators joining and competing in the payment landscape. Now, I'll introduce you to our payment solution, mWallet. mWallet can be fully customized by operators. Every payment transaction, whether it is wallet to wallet or through an NFC reader or a QR code, is secured and encrypted by the blockchain. A lot of the front-end features you see here, I'll be showing you later. Back-end features include KYC processing, blacklisting, and the setting of transaction limits, fees and rewards, and currency exchange rates. The mWallet and its core infrastructure can be expanded into a fully fledged neobank, a digitalized bank with 0 physical branches. Our mWallet and other solutions sit vertically on top of our development and infrastructure platform. The platform integrates our native blockchain with further distributed and decentralized service layers. We have storage, streaming, database, and contracts. We have advanced features that are useful for fintech solutions, such as multi-signature and aggregate transfers, and the platform's available in public, private, hybrid, and consortium network configurations. We can see here that a developer has every component needed to build any type of solution, whether it be for fintech, or video conferencing, or a YouTube and social media type app. Integration is kept simple through our API gateway, and we have SDKs written in multiple common coding languages. We have an mWallet customer in Cambodia, licensed by their national bank. Their mWallet solution is called Payloy. Payloy has over 200,000 registered users, and it is the Payloy solution that I'll be demoing to you today. Loy actually means money, so the solution is called Pay Money. You can exchange your currency, generate an authentication code for online payments, view and receive your notifications, and you can pay to a wallet or a non-wallet. And when you pay to a wallet, it takes seconds. You enter the amount, an optional message, select recipient, and then you perform the security verification. Within seconds, the transfer is executed and confirmed. You can request money by sharing a QR code, and you can pay by scanning a QR code. You perform the security verification, and within seconds, the transaction will soon be reflected in the balance. You can upgrade your account to increase your transaction limits. You can search for existing Payloy users by typing in their phone numbers and email addresses. You can search and filter through your transaction history. Top up if you have a bank account in Cambodia, as that's where our solution is licensed. And this is a popular referral program that right now has gone viral in Cambodia. You can change your security settings, language, hide your balance. You can change to cashier mode if you're a shopkeeper or a restaurant owner. And you can submit a help desk ticket if you require support. Before I go, I'll quickly introduce you to our other white label fintech products. We have a capital markets platform for the creation, issuance, management, and secondary market trading of regulated digital assets, so securities, bonds, derivatives. What the solution provides is an end-to-end service that makes a lot of the intermediaries and processes we see in today's markets redundant. The blockchain provides significant efficiencies and cost savings for an operator. They can then be passed down to the end users. By adopting this solution, you can create an attractive and competitive business model. We have a KYC and digital identity platform for instantly verifiable claims. You can verify just by scanning a QR code. Zero knowledge proof verification, meaning you or a system can verify someone without actually needing to know who they are and obtaining their personal information. Blacklisting and credentials management. Credentials can be many. It could be that you are KYC approved by a banking consortium. It could be your digital passport, travel visa, medical records, such as for your COVID vaccinations, property titles, even your office security pass. The platform uses our self-sovereign identity technology that complies with the W3C standard. What the blockchain is doing here is that it's generating trust, and it is safeguarding your personal data. You can trust that the person you are dealing with is genuinely that person, or that they have had their COVID vaccination, or that they are KYC approved. And we have a neobanking core system, a framework and protocol for digitalized banking services. What we are providing here is the backbone for banking services. An operator can then integrate other third-party services and solutions. The benefit of using blockchain for your core infrastructure is that, again, you're generating significant efficiencies and cost savings. We are opening the door for operators to join and compete in the banking industry. Our solutions are available in Morpheus Labs app library. Morpheus Labs is our partner and the co-organizer of today's event. Our company, Proxima X, is a blockchain infrastructure and solutions provider. Proxima X is a startup. We're almost 3 years old. It was founded and is led by Lon Wong, an industry leader. We are a global team of more than 50, and we're eager to help you adopt our solutions. You can find out more about Proxima X at our website. Thank you.
Thank you, Mr. Nicholas, for the wonderful presentation. Now, let's take a 10 minutes break before we come back to the last session of the event. Do stay till the end to win some lucky draw prizes from the Q&A. Welcome back to Huawei Cloud Day FinTech Digital Innovation Symposium. We have come to the last session of the event, and I would like to warmly welcome all the panelists and moderators that we have invited. Mr. Chia Hock Lai, President, Singapore FinTech Association. Mr. Prasenjit Chakravarti, Banking Practice Lead for Accenture, Southeast Asia. Mr. Kevin Lim, Associate Director, Temasek. Mr. Wu Shiwei, CTO, Huawei Cloud and AI APAC. Mr. Greg Unsworth, Risk Assurance and Digital Business Leader, PwC Singapore. Dr. Rex, Advisor, Morpheus Labs, Vice Chairman, Bansi. I will now hand the show to the moderator, Dr. Rex. Dr. Rex, please.
Hi, thank you very much. So, welcome everyone to the panel discussion session. So, for our panel, we have the benefit of having the earlier speakers to cover various essential points. And okay, so that's the panel members. And then for those online, and if you want more details of the various distinguished panel members, you can check out the QR code or the hyperlink. Okay, so before we jump into the questions, so essentially we'd like to start off by sharing with everyone this particular book that I have found. In fact, it's available as an ebook in our National Library box. So it's called The Blockchain, Artificial Intelligence and Financial Services. And for those who might be new to the application of blockchain and AI into fintech, the book actually introduced the link very well. So essentially for blockchain, it's recognized that we are still in the early stages. And then for AI, so while the technology is not able to completely replace human, it actually has a complementary features to that. Okay, in addition to that, so within Singapore, in the Industry 4.0, the government at the top level recognize 7 different key pillars, and of which blockchain technology and AI is actually considered one of the critical factors of technology. In addition to that, IMDA published about 1.5 years ago, and they identified these 9 key technology trends. And at the minimum, at least as far as blockchain and AI is concerned, 3 out of the 9 key trends are relevant. And in fact, if we encompass what was covered today, let's say the cloud computing or technology itself, it actually includes even more technology than that. So we are in a very fortunate place in Singapore whereby the technology development and adoption is very much supported by both the government as well as the private sectors, right? So these are the various organizations and entities among many others. Okay, so with that, so we will continue with our first question for the panel members. So first question is, how can fintech companies or the FSI ensure that their innovation would be able to continuously comply with the MAS security regulations? And then for a start, we'd like to invite Hock Lai to share with us some insights.
Thanks, Rex, for the introduction. Perhaps I will answer from the perspective from the fintech ecosystem. Last year in June, Singapore Fintech Association, we rolled out a compliance readiness framework. So basically what we did is that by working with PwC Singapore, they went through the MAS regulations related to technology risk, cyber hygiene, outsourcing, and then come up with a baseline compliance baseline requirements for these fintechs to comply, because more than 80% of the fintech companies in Singapore are B2B, which means that they are more likely to be working with a financial institution. And if they are not familiar with all these regulatory guidelines related to technology risk or cyber risk, then they might not be that effective in working with them. So with this guideline, we also came up with a digital self-assessment tool so that they can then go online and then do an assessment on where are their gaps. And then we organize a series of workshops so that they are able to work with industry consultants on how to plug that gap. So basically my advice is that the first stop, go to apply and become a Singapore Fintech Association member and avail yourself to this. In fact, we are positioning this guideline as a living document because over time, that standard should be raised. And the other thing is that one of the banks actually approached me recently. They read through the entire compliance readiness framework. They say it's very good, but not good enough. Because they're also looking at other aspects, such as shared responsibility. Because when working with a fintech company, the fintech companies will be assessing their customer base. What other things can the framework be done so that gives them comfort to both the bank and to the fintech company on that collaboration can be compliant with regulations, yet beneficial to both parties? Yeah, that would be my response.
Okay, very nice. And then how about we have HUAWEI to help us with this question as well?
Okay. So I think I can I can speak from the infrastructure perspective because when we talk about innovation, usually the cloud infrastructure will be the top one preference. So in general, choosing a secure cloud provider is extremely important because it really saves you a significant amount of effort when you are going through the compliance or auditing process. So we talk about, shared responsibility. So there's responsibility of the cloud and as well as cloud. So take Huawei Cloud, for example, in terms of the cloud. Huawei Cloud has more than 50 well-recognized certifications that you have seen from the previous session my colleague has shared, such as the ISO, CSA Star, also, the SOC 2 report. In Singapore specific, the MTCS level 3 is very important. And in the finance industry, the OSPA recognition, again, is very important. So with all those certifications and recognitions, basically that gives Huawei the entry point or the entry ticket to serve any size of financial institutions. Now, when we talk about the in-cloud responsibilities, means that the tenant or the companies, fintech companies who's building their innovations on cloud, they have to be also aware of the compliance. So we usually recommend the fintech companies will start with reading the security white papers published on our website, such as the PDPA white papers, etc., and well architecture framework, etc. We encourage you will work with external consulting partners, such as Big Fours, because they have very good knowledge about the regulations across different authorities. They usually combine into a secure framework, cloud framework, where it can guide you go through this preparing phase. So the good part with working with a third party is you don't have to go through tons of regulations and prepare one by one in accordingly. Usually they actually summarize everything for you, so that's save you a significant amount of time. So basically, in summary, it's shared responsibility between the cloud vendor as well as the tenants. And with Huawei Cloud, we do our best to provide the off-cloud certifications and assurance to help the fintech companies.
Thank you for your response. And in fact, what you said reminds me of your colleague who presented the Anson, who presented the various offerings that Huawei has. And perhaps I will take the liberty to perhaps request maybe for the earlier presenters, if their slides can be made available to the participant and audience. I think that will be excellent. All right. Okay. Then next, so Greg, who presented in the first segment, and I'm sure you would also have special insights to this question, and where necessary, you may wish to link to some of your earlier points for the benefit of our live audience that just joined us perhaps over the last few minutes. Thank you. Over to you.
Okay, well, thank you very much. And I think I'll just build on the sharing that we've just had in the last two answers, which I think were very insightful and very relevant. I think one of the concepts where we're engaging with our clients is make sure you're building in security by design. And what we mean by that is as various innovations are developed, new products, new services, new ranges, the security considerations are designed from the word go and then followed through right through the implementation and the execution. I think the other important point is also to make sure there's regular, robust security testing undertaken. So whether that's mobile app penetration testing, whether it's looking at the overall security and access controls in place is quite key. Bringing all that back to the right frameworks, there was a discussion there about the frameworks that obviously firms like PwC and others can help with. I think that's really important. One place we take a lot of reference from is the guidance from the regulators. When we look at the MAS's technology risk management guidelines, I think the effective ones, it does talk a lot about that security by design concept. We've obviously they've released the most recent version in January. So I do recommend that both existing financial services institutions, as well as the fintechs, become very aware of those. I think the point with the fintechs is increasingly they'll become either directly regulated or at the very least indirectly regulated or quasi-regulated, as I'd refer to it, particularly because of that point around them very much operating in the B2B environment, working with other financial services institutions. I think the final point I would just make is just to stress around engaging with third parties as well. So working with, if you're putting in place cloud systems, making sure there's built-in really strong cloud security frameworks. And that reference to the OSPAR framework for third-party providers is a really fundamental one and one that's established as well. So I think that's key. It's really important to start from the very early stages, focus on that security by design and then see that through to execution.
Thank you very much for your response. And in fact, when you mentioned about security by design, that reminded me of a mega resource that the cybersecurity agency just released, I believe, just a few days ago on their website. And while the guides were seemingly meant for the CII, the critical infrastructure organization, but I think having looked at the guides, which includes, for example, system development life cycle, and they actually cover all the different stages. And I thought that is actually a valuable resource for our SMEs as well, right? Okay, very good. So, and in addition to that, I have been also tracking various developments or activities within MAS, and these are the various methods that MAS has put in place to, I think, encourage various risk-taking and innovation within our organizations in Singapore. Let me do a quick time check. Maybe we can spend 2 minutes. Would anyone in the panel be familiar with any of these, and you can quickly share with us some info? Anyone?
Maybe I can start off with the sandbox, because I think that is one of the most popular tools used by regulators, not just in the region, but over the world. Singapore is the second country to adopt a regulatory sandbox after United Kingdom. In fact, we don't have just one, we have 2 sandboxes, because one of the feedback for the regular sandbox is it's very difficult to get in. And because in order to get in, you have to justify how you intend to get out. So that's why we have the Sandbox Express for certain business models whereby the risk level is considered low, like insurance brokerages or even exchanges. That's where you can get into the sandbox. And the other interesting fact is that if you look at all the sandbox participants, right, about 50% of them are using blockchain. So that explains why you are using a sandbox, because you are using that to try out a new business model and a new technology. And not just for the startup itself, but also for the regulators, for them to learn what are the kind of new risks that this new technology could bring to the system. Because a lot of the regulations are technology agnostic. But you don't know whether new technology can bring in new risks that is not regulated by a technology agnostic regulation. Yeah.
Okay. So thank you very much for sharing these. I would consider it the insider insights to the MAS sandbox. So for the audience who are thinking about going into the sandbox, would strongly encourage that get in touch with HUAWEI for more information. Okay, next, let's look at the second question. So globally, banks are facing continuous trim down in sizes over the past decade, in addition to various other issues that Greg has shared with us earlier in your presentation. So the question will be, how would the banks of the future looks like? And then for this question, we'd like to invite Prasenjit to share with us.
Okay. Yeah, thank you. Yeah, I think this is a very interesting question, and it's like trying to predict the future. You know, so it is first of all very hard to exactly predict how the banks of the future will look like. But there are some things which are actually becoming clearer as we go along, right? So I think one of the first things is, and I cannot remember who said it, but I think it is very insightful, is that banking is essential, banks are not, right? And it actually gives you a sense about what is happening in the world. There is fundamentally a disaggregation of banking into many component parts, which by themselves are meeting very specific use cases, but slowly eating away at the core of banking, right? And a great, if you think about what Grab has been doing in Singapore, or what some of the other players have been doing, even without a banking license, is eat away on the payment side, on the micro investment side, on the the travel insurance side. So you start to eat away at the core of the banking model with very specific use cases, and sometimes it is one company like Grab, sometimes it is smaller players like. Look at the Lemonades of the world who are disrupting insurance and insurance business and insurance sales, which are, again, the reason I bring that up in banking is that banks make a lot of money selling insurance as distributors, and that revenue stream goes away. So I think that's sort of a view of the bank. The other insightful thing, which actually Accenture has released in our 2021 trend on banking, the global banking trends, which I find most, there are 10 trends, but this is the one I find most interesting, is that the banking app, which is quite counterintuitive, the banking app, which many banks spend millions of dollars building over the last 5-7 years, is becoming less and less relevant. And a great example of that is if you think about what is happening in India with the advent of digital payments and how the payment wallets have become the primary financial app that customers use on a day-to-day basis. And some interesting stats, right? A typical customer uses a digital payment app 7 to 8 times in a day, and they use a banking app 1 to 2 times in a month. Because the digital apps in India, for example, don't, and you can extrapolate that to the Google Pays that are coming into Singapore. Same logic, right? And Google actually is a big player in India, right? So once your day-to-day payment and your everyday interactions start happening on a different app, the banking app disappears. So then the question is, what do the banks do? And I think basically the bank of the future is a collection of platforms. It's a collection of platforms with a regulatory license, right? Which is probably the last sort of barrier to entry for many players, because you need a banking license from a regulator to enter. But as you can also see, many regulators are giving away many new licenses. So even that barrier is falling. So I think that's the disappearance of the app, disappearance of banks as institutions into multiple components, and platformization of the banks are some of the big things that we see happening in our.
So thank you for your insight. Yeah. So you mentioned the banking is essential, banks are not. So the next time I hear someone use this again, I will definitely remember you, okay. Grab, and lastly, Bill Gates. Okay. Then next, okay, so for this question, perhaps HUAWEI would also like to share with us your insights. Thank you.
Sure. I think I agree, because we're talking about banking 4.0 a lot, and banking 4.0, depending on how you define it. But to me, it's really about making banking services everywhere. That means that the banking service does not have to be presented in terms of bank application. It can be embedded into maybe IoT chips. So that's, I think, it's clear. We really look at what's happening right now with most of the banks. I think most of the banks are still stuck into the Bank 2.0, where really it's about mobile first. So they are spending most of their effort trying to upgrade the mobile applications to make sure that it has, cloud native design and the microservice design, all these technologies. So that's, I would say, most of banks do it. Some of the banks are taking one more extra step as they are trying to build a super app. So instead of making the banking services, available into the ecosystem, embedded into other providers or distributors, they are trying to build a centralized super app so that they are building their own ecosystem and integrate with the lifestyle applications into this super app. I mean, this is another, I would say, approach. It's certainly different from the banking everywhere design. One is distributed, the other one is more centralized, but I don't know which one will actually become the dominant approach. But either way, I think regardless we are going to the super app approach or the distributed approach. I think the banks has to design at least these 4 core themes. The first theme, I would say, it has to be real time. So basically means if you offer me a banking service, you should make sure that I can get service available real time. For example, if I want to subscribe a based on the information I provide it, based on the information you know about me as a consumer, you should come up with decision of a yes or no immediately, not waiting for like a week and then tell me the result. So that means the banks really have to adopt so-called knowledge and AI ops to really automate this process. The second thing I think it's important is touchless. This is especially important because the hit of pandemic, I think it's still going to last for a while. So we really have to make sure all the services are made available without the customers need to go to the physical branches. Then the eKYC becomes important, and sometimes you have provide very innovative ways in terms of serving your customers. And then the next, I would say the connectedness or ecosystem, which I think more or less touched in the previous discussion. Regardless, you are building your own ecosystem with a super app, or you are trying to embed it into a broader, large ecosystem distributed environment. This has to be implemented. Then the API design, the IoT framework, that all becomes very relevant. And the last one I would say is personalization. That's I think in most of banks it's missing because if you are trying to serve a customer without a centralized environment, without a physical branch, that means you really have to understand the customer. And when you offer your banking services, it's going to be more banking services made available by the digital banks as well as traditional banks. You cannot just offer that as a standard package to a certain customer. You really have to make it personalized. For example, different pricing schema depending on the customer profile in insurance industry, for example. This has to be automated. This has to be data driven. So I think that's what's going to happen in the next few years with the development of the latest technologies.
And we certainly look forward to more touchless or human-computer interaction types of systems or interface from Huawei and various of your partners, right? Okay. Kevin has been waiting. Okay, so for question 3, so there are 2 parts to it. So firstly will be whether the blockchain is the key to digitalize a financial market, and then after that, how that will impact the entire industry. Over to you.
Thanks, Rex. So I'll try to keep it relatively short itself. In essence, my answer is no. So the way I see blockchain itself is really very much like a tech enabler. So I think Rex was mentioning earlier as well, even at Singapore, the way we think about it is that there's various pillars. So blockchain, AI, data, cybersecurity, some of the topics that various panelists have mentioned before. Frankly, if you do a deep dive and think about them, they all come together to do what? They all come together to create a new and better user experience for the end users. So if you ask me, I think innovation is predominantly driven by 2 factors, right? Either you sufficiently reduce some of the existing pain points within industry, or on the other hand, you create new meaningful, new experiences, new possibilities for the users so that they have the wow experience. In that regard, I think if you think about blockchain as an enabler, it really shows quite a bit of promise. The concept of smart contracts, things like immutable ledger, right, as a common source of truth itself. All this have a lot of value that we can play within the financial markets itself. Coming on to the part B, how we impact the whole industry. The way I usually like to quote is the Amara's law, where in the short term, there's a tendency for us to really overestimate the impact, right? But in the long term, we underestimate how much and how much gravitas, how much real impact it has on the economy. And I think this is not just another fad. I think it will come. The question, though, is that in terms of timelines, a lot of times we are a little bit impatient. And that's where people maybe have a lot of high expectations in the near term, but they may not see this turning out until a few years down the runway.
Okay. Thank you very much, Kevin. I'm also mindful that Greg has another appointment, so perhaps would like to invite him first to address this question. Over to you, Greg. And while waiting for Greg to come back online, perhaps we can switch over to HUAWEI to address this.
Okay. Yeah, if you look at current adoption of enterprise blockchain, it's really restricted to mainly supply chain and trade finance. These are areas whereby the inefficiencies are big enough to justify the investment in blockchain, because if you look at deploying a blockchain solution is not cheap yet. There's a lack of tech talent in blockchain. There's also like to deploy onto blockchain solution, a lot of the infrastructure, including cloud computing, all these are also not cheap. So you need large-scale projects to justify all these investments. But what I see is that in future, blockchain could be offering alternative financial infrastructure to the financial services industry. Because if you look at a lot of the current fintech innovation, they are still relying on the old school financial infrastructure like Swift. Okay, this is where I think blockchain could make a difference, and we are already seeing some innovation in this space. We have this blockchain services network currently supported by the China government, trying to create a global digital infrastructure for blockchain. And then concurrently, we are seeing a number of countries. In fact, 80% of central banks are already experimenting with central bank digital currency. So once that becomes pervasive, potentially blockchain could be an alternative infrastructure for clearance and settlement. So I think that at that point in time, I think that impact will be quite significant. And I don't think we are that far away from that. I think within the next 3 to 5 years, we should be seeing some kind of this infrastructure in the market.
Yeah. Okay, thank you for sharing. Is Greg back? Okay. So, and finally, okay, so for question number 4, essentially will be how FSI can succeed with blockchain adoption. So for this question, I would like to invite Kevin again to address this. Yes.
Sure. So the way I think about it is actually quite straightforward and simple. If you really think about blockchain as a technology, it's been around for really quite a long period of time. It has gotten a lot more recognition and awareness in recent years because of the likes of Bitcoin, Ethereum, how price movements have affected it, and a lot more people, attention, and talent is coming into the field. I think now, though, while there's a lot more interest in it and you see that general momentum, what has not yet been so clear is the rulebook, right? So if we really think about blockchain as a technology itself, and you think about financial services institutions, which are big institutions, regulated entities, systemic in nature, I think the crux of it all, frankly, is a clearer rulebook, which will probably come over time. I know, and I've been in multiple conversations with different regulators. They all are aware, right? This has to be done at some point in time. So when rules get clearer, when people and the masses, the end customers themselves have a better sense in the event of exception, in the event of the dispute, what would be the outcome? What would be some of the precedents that they can actually refer to? I think this is when blockchain itself as a technology can be a lot more, you can see a lot more momentum in terms of the adoption. So that's one. Secondly, in terms of that, there's the stickiness factor. So again, there's a lot of innovation in the particular space now. Over time itself, the way I would see it is that you see more of certain platforms outwinning the others, right? And once you have that, it's very similar to some of the concepts of the super apps that we have today, very similar to how we have some of the tech unicorns. I think that's where they really will drive a lot faster adoption across the market itself.
Okay, thank you for your insight. And also would like to invite Prasanjit to share with us. Yep.
Sure. Yeah, I think just building on what Kevin said, I think the first point I'd like to make is that actually blockchain by itself is not the not the only piece that is required. Blockchain is one of the technologies, including distributed databases, including authenticated and secure computing for tokenization. All of these are building blocks that build on top of each other to create a solution that is relevant to a financial services institution, right? And so I think the first thing is that those different solutions are evolving at different speeds, and at some point they will all match up, and you will reach critical mass, right? So what do I mean by that? For example, there is a big question, or there has been a big question: can blockchain actually operate at scale, right, for trading and settlement? So Accenture did some work with DTCC in the US, which is basically the trading clearing and corporation behind the New York Stock Exchange and the bigger equity markets in the US, to test how scalable it is. And we were able to process 100 million equity trades in 5 hours on the blockchain platform. So, and again, it is just to show that actually if you build it right and design it right and architect it right, blockchain is ready for enterprise scale, global scale, right? The cost is obviously a little bit of an issue, which we agree is another challenge. So I think in terms of, therefore, what can FSIs do to succeed? I think that the use cases are proven. Now the question is, where do you want to start your investment cycle to build the full end-to-end, right? So I'll give you a good example. Carbon trading is a completely new space in this part of the world and in many parts of the world, and is ideally suited, especially not just the trading platform itself, but the end-to-end value chain of carbon trading, from tracking the provenance of the quality of the carbon trading asset to actually the accounting of the carbon credit itself, right? That technology is very suited to, that use case is very suited to blockchain adoption. And there are many players in the world who, as they look at building capabilities like this, are thinking about blockchain. The second is obviously the trading and settlement that I talked about. And the third big thing that we see is eventually we think all regulators in the world will have something like equivalent to the CBDCs, the central bank digital currencies, because that is basically the future of currencies. Obviously, some will progress over time a little bit less or more, faster or slower, but eventually that is the future. And once that happens, there will be some massive changes that banks will have to do to adjust to a new sort of type of currency in some sense. And so I think that those changes will have ripple effects into the banking system.
Okay. So if anyone from MAS is watching and is looking for consultants into the digital currency space, you know who to look for, right? The panelist members. And then for carbon trading, incidentally, 2 days ago, I was in the pitching event organized by Enterprise Singapore. And then out of the 14 teams, one of the team is called the 360 Green, and they are working with Air Carbon to try to tokenize this space. So I thought that was pretty fascinating, right? And then just now you mentioned about the platform that process 100 mil trades within 5 hours. Would you know which blockchain they are using?
I have to find out the details of it. I'm not sure. Okay. I know Accenture typically uses R3 as one of the main technologies, but I cannot confirm
so
that.
So that's the DTCC, right?
DTCC, yeah. Which is the clearing agency sitting behind, the custody and clearing agency behind.
All right, so that shall be my homework. So thank you for the homework.
Yeah, no problem.
Okay. And finally, so about 2 months ago, so DBS launched the digital exchange, and there was a mention about the 3 particular products offerings. So you have a security token offerings all the way to digital custody services, and then was hoping that the panel member could shed some lights or perhaps insider information, especially for the security token offering. So in this case, Kelvin has volunteered to share with us, and after that we'll see opening up to the rest of the panel members. Kelvin, go ahead.
Sure, no, I'm happy to take this, right? So there are 3 points I'd like to make itself. So first on the digital currencies. So generally, banks at the end of the day are an intermediary that's trying to service their end clients. And they are in there for a business, they're in there to make revenue. I think what has been recognized itself is that gradually cryptocurrencies as an asset class, there's more and more demand, more and more appetite from the end clients. So banks have to think about how do we best service it. One of the questions the clients will ask them naturally is, in the space of such asset classes, I want to partake in the right, but I'm really not sophisticated and I don't want to take the risk of holding onto my private keys. So digital custody, could you actually help do something like that for me, right? At the same time itself, a digital currency exchange to allow me to liquidate this to fiat or vice versa, right? That would actually be a very useful utility to the bank's clients. So I think this is the genesis that institutions like DBS would definitely consider when they make a step towards this particular direction. Adding on to the next point itself, security token, I think this is something that will come. It's not whether it will come, it's a question of when it will come. The way I like to talk about it is as such, right? If there's a better way, and I talk about this in terms of a faster way of distribution, hopefully cheaper, fractionalize it to lower denominations, right, of various securitized packages, and you find a way to distribute this to a wider and larger range of investors at a cheaper cost for issuers, I frankly don't see any downside to this overall process at all. So I think it will come, but again, as I was mentioning earlier as well, questions relating to the rule book, which are the first few players that come into this scene, and over time itself, creating that momentum, creating that stickiness, these are all considerations that will pan out over time. Yeah.
Okay, thank you for sharing your insights. And it would be interesting if Temasek would invest in technology companies that are into any of this space. Okay, just trying to be a little bit naughty. Okay, so open up to the rest of the panel members to see if you have any insights to share. Go ahead, anyone? Yes.
Yes. A few years back, one of the bankers told me that a customer walked to his branch and asked, "Can I buy Bitcoin in your branch?" So the customer demand is real. Yeah, so it's not surprising to me that DBS came into this space. And the other part on security tokens, in fact, I would say DBS is already late, but they are one of the big names. We have many fintech players already in this space. One notable example would be this fintech startup called Bond Value. Disclaimer, I sit in their advisory board. They tokenize corporate bonds, which are typically in $250,000 denominations. So now you can now buy corporate bonds at $1,000 denomination. So they have a rule book, they have digital custody by Northern Trust, they have the entire digital security token exchange. So these are already available there. And I think more asset class probably will come into this space, including, for example, funds. This will then really make a lot of these alternative investments more accessible to the more people, not just only available to the high net worth people. Yeah. So I'm seeing a number of projects currently in the works on this. Thanks.
Incidentally, when you talk about funds, so over at the Business Angel Network, where we have two angel funds, a much smaller fund, about 6 months ago, we were actually considering the STO on our funds, but we are still exploring this space, right? Okay, so any last thoughts on this topic? Okay, so if not, there is another book which the audience might be interested to check out, also available for download in the NLB. So it's FinTech, the new DNA for financial services, and in particular relevant to today's topic. So I thought that the chapter 8 and 11 is they are highly relevant, right? So the application of blockchain technology in financial services, as well as how AI is applicable to financial services. So for those who want to explore further beyond today's seminar and panel discussion, do check out this particular book. All right. So I guess we are sort of out of time. And then, so I would like to thank our distinguished panel members for your gracious knowledge sharing that benefit our community. All right. Thank you very much. Okay.
We have now come to the end of the event, and I would like to thank all the speakers and panelists once again for the amazing speeches and your time here with us today. I would also like to thank Morpheus Labs for co-organizing this event with Huawei Cloud. Please scan the QR code or click on the link at the chat bar for the Q&A to walk away with our Huawei Watch GT2 Pro, Huawei Watch Fit, or Huawei Band 4. We will pick the first 3 lucky winners who can answer the questions correctly. The lucky winners will be contacted after the event. Thank you once again for joining us today. See you next time.